What is going on, guys? Welcome to Stock Talk with Nico Kritikos. Today, we're going to be talking about Flutter Entertainment stock. This stock went IPO in February or the last day of January of this year. And so far this year, the stock is up 27%. This is the parent company of FanDuel. And as you can see here, this company has total online market share of 35%. In sports betting, it was 41%. And in iGaming, it was 25%. And this is still a growing company, 46% growth in customers. And then they caution that the third quarter outperformance had been more than offset by blah, blah, blah sports results in Q4. So let's take a look here at their numbers. What we have is the last couple of years, you can see that pretty much since 2023, revenue has been roughly flat. And even though analysts had them doing numbers like 11.2 billion this year and then 12.8 billion next year, we're looking at anywhere from 20% growth this year all the way down to 14% growth next year. So the growth is not that high. It's starting to slow down a little bit. If we look at that's 13 billion, let's look, yeah, so that's trailing 12 months of 13 billion. Then net income, though, this is the huge problem. This is a $47 billion valuation on this company, and they're losing tons of money. Now, beginning of this year, it was really bad, over $1 billion. The last couple of quarters, it's gotten slightly better. The good thing is free cash flow is positive, right? The balance sheet is not good. 7.5 billion in debt, only 3.5 billion in cash. Now, as you can see here, gross margin and operating margin are actually positive. Gross margin of 46%, not bad. Operating margin takes it all the way down to 3%. That's the problem. And then profit margin is negative. So one of their big issues is either the taxes they're paying or the interest they're paying, because that's what's bringing this profit margin down negative. But even operating margin is still, this is not good. You can't have 3% operating margin. That's a problem there. So, and honestly, I'm surprised. I'm surprised the stock is trading at this valuation, and I'm surprised for a company that did $12 billion in revenue and is, expected to do over 12 billion next year. I'm surprised that they're not making some profit. So it's kind of confusing there, but I don't know. I don't see why Wall Street or whatever big money is buying this. I'm kind of confused on why they are. And I mean, luckily the shares outstanding has not been doing anything crazy the last couple of years, but still, I'm surprised that they're buying this, and I don't see a whole lot of value. I think it's overvalued at this point where they're not making any money. So that is my analysis for Flutter Entertainment. Thank you for watching, and I will see you in the next video.